Hello, everybody. This is Alan Ellman, the Blue Collar Investor, and welcome to this video I'm creating regarding a trade that I initiated on Monday, April 7th, with an expiration date of 4/18/2025. It's related to Eldorado Gold Corp, which is listed on the New York Stock Exchange under the ticker EGO. Now, we are in a very challenging market environment right now, a real steep roller coaster ride related to the imposition and reversals of tariffs. But there's also concerns regarding an imploding bond market, and as well as perhaps rising inflation and maybe even rising interest rates when people are actually hoping for reduction in interest rates. So this is the backdrop from which we was sharing this video and the specific trade that I initiated with Eldorado Gold. So this is a 12-day cash secured put trade. It is traditional but leaning towards the defensive. And these are the type of trades that I've been executing pretty much for the last 2+ months when tariffs became a concern in the stock market. So here's why I selected this particular security on April 7th. At the time that I initiated this trade, and it was 10 contracts, Eldorado was trading at 15.89. It came from our BCI database of stocks and ETFs that we have identified over the years, the traits of these particular stocks for potential option candidates. So this particular report was very unique because the market had gone down so much that there were only 3 stocks that passed our rigorous screening process. Now, we also had a whole bunch of ETFs that were eligible, but as far as the stocks, this was only one of 3. So that's one of the main reasons why I selected this, in addition to my other portfolio holdings, which are mainly ETFs. It's been on our premium stock list now for 2 weeks, and it does not generate a dividend. Now, the implied volatility is pretty high for this particular security. As you see here, 60.3%. So, I mean, the whole market is volatile, but this is more volatile than the average security in the stock market. Now, the good news here is that it's in the mining industry segment, which was at the time ranked A, the top 20%. The next earnings report, May 22nd, certainly does not interfere with our April 18th expiration. Now, the on-balance volume was bearish. So that means more money was coming in on down days than on up days. And since most of the days have been down days, this was pretty typical of almost all stocks, really. So the mean analyst rating, 2.1, which is above average. It runs from 1 to 5, 1 being the best, 5 being the worst. So above average mean analyst rating. Now, there are no weekly options available, which I've been doing a lot of in this market environment. But so we went with this 12-day trade expiring when the monthly contracts expire, which was 4/18. All right, so let's have a look now at the initial calculations, and then I'll tell you where the trade stands as of just before I created this video a couple of minutes ago. All right, so we enter into the trade management calculator. The price of Eldorado was 15.89, and you'll notice with this broken red arrow that the break-even price point is down to 13.87. So we had more than $2 of protection to break even. Now, the 14 out of the money put strike generated 13 cents. Well, you may feel that, well, that's no big deal, 13 cents, but don't look at the amount. Look at the actual percent return and then annualize it, and that will give you a better perspective of what this means. Okay, so if you look now at the bottom row of the spreadsheet that I'm showing you here, it tells us that, yep, 12-day trade, your 13.87 is your break-even price point. Now, the brown field shows you the return, and it's 0.94%. And based on that 12-day return, that annualizes out to 28.5%. So it is significant. 13 cents is significant, and you have all that protection to the downside, which if you were to use a percentile, it's a 12.71% from current market value when I entered the trade to the break-even price point. So those are the two outcomes, a 28% annualized return, or we buy Eldorado at a discount of 12.7%. So that's the reason why I entered the trade. Those are the initial calculations. Now, where are we as 5 minutes ago? Well, Eldorado actually has gone up in value to 17.77. Now, this is Thursday, April 10th at about 10:30. Okay, so that means it's $1.88 higher than when the trade was entered, and that's pretty unusual given the current market environment. Although yesterday, Wednesday, was a huge up day when there was an announcement of reversal of some of these trade policies. Today, Thursday, has been another down day as most of the days preceding it. Okay, so if we look at the 14 out of the money put strike, current market value is up $3.77 above that put strike. So it would have to drop by more than that to be subject to exercise and having the shares put to us. So that's nice. And it's $3.90 above that break-even price point of $13.87. So given this challenging market environment, this is an example of a trade that we could make every single week, every single month with an elite performing security, taking a defensive posture. I consider out of the money put strikes a more defensive approach. If it was a normal market, I'd probably go with an out of the money covered call. But here we are in a challenging market environment, keeping our fingers crossed that these reversals continue and the stock market will normalize in the near future. In any case, I'm happy to share this trade with you. It's going on right now. The final the results we don't know yet. We have until April 18th to make that determination, but we could certainly say with this particular trade, all 10 contracts, so far so good. Folks, I hope you found these videos that I've been creating recently with showing trades from my portfolios. I hope you find them useful. I hope you find them educational in value. And so I want to thank you for taking the time to watch and listen to this video. I hope you enjoyed it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.